Bankole, I'm sure you're doing great today. Let's get right into it. Can you give us an update on the fixed income markets in terms of yields? Looking at the picture globally, they're saying emerging market funds are recording outflows of about $800 million in total. But here in Nigeria, traders say we're seeing offshore investors showing more interest, of course, as our oil price firms up. What is the case this week? What did you see this week?
Okay, before today, we've seen relative stability because of illiquidity locally. Money markets have been very tight, and we've seen overnight rates go back from 14 to over 15%. With the fixed income market, between today and yesterday and today, actually, we've seen a drop of over 20 basis points in the yields because some banks who have very fine portfolio of foreign investors have decided to take position. It might not be unconnected to the MPC decision or the MPR decision that will be taken next Tuesday. Basically, expectations are that MPR will still be maintained at 12, and if MPR will be maintained at 12, basically, yields have grown since the last MPR, if you look at it. So it's more attractive, really. So if the major factor that we look at in taking these decisions stable, and the yields of these particular securities we are talking about have grown due to illiquidity or the fact that some people took some, profit on their positions, it's also a nice time to come back in. And looking at what has happened in the corporate bond sector of Nigerian banks that floated USD denominated bonds who have paid back, some confidence level can be ascribed to the securities issued from Nigeria, basically.
Well, Bankole, specifically looking at yields, traders remarked that looking at Wednesday's auction, specifically the 7-year maturity, which was at 16.5999%, 16.599% actually, was particularly surprising. Can you give us some reason or some insight behind why they thought this was surprising?
Okay, 25 billion was issued for 5, 7, and 10 years bond maturities, but we saw more aggression or competitiveness on the 5 and 10 year bonds. I would ascribe or relate that to the activities of pension fund custodians who usually invest heavily, and of course it has to do with their portfolio mix and their statutory demand, because these guys are required to invest quite an amount in fixed income securities, that's T-bills and bonds, especially in the long-term securities that we have. So basically, there wasn't major demand for the 7 years. Initially, when it was issued, we saw that aggression. Of course, people haven't gotten out of the positions they have. Yields haven't really dropped, like I've said. Yields have remained attractive. So people haven't even gotten out of their position. That's for those who trade and speculate. But for those who keep position, they were more aggressive for the 5 and 10 year bond maturities.
Well, Bankole, let's shift our attention to the money markets. What is the picture there? Are we seeing liquidity continue to remain tight?
Yes. By this period of the month, funds usually come in at the last week of the month. We're going into the 3rd week, or we're in the 3rd week. Where the Federal Allocations Committees haven't even met, not to talk of how speculation of the amount that will come in. And usually when these funds come in, because the system, would have been in a debit, when the net that hits the system is usually not enough to take us to the next month. This is not by error. It's by it's a strategy actually to check inflation, because we've seen inflation, MPR figure that is also a major tool of controlling inflation being kept at 12 for a while. And initially we used to see the CBN sell OMO T-bills. This has stopped because of this tightness. It's just, they expect that it's enough. We've had enough tightness in the market already, instead of doing OMO. So they've stopped OMO, but federal allocations have been delayed quite a bit, to ensure that inflation is being pegged at the level they are. Sometimes last year we got to the single digit, but we have inched back to 12 point, for over 12% levels, 12.9 levels. So basically, this is the major issue why the system is tight and the government won't be willing to do something as drastic as buying back of bills yet.